Hello everyone, welcome to Elliott Wave YouTube channel. Today is July 23rd and we're going to be looking at the chart of copper today as the chart of the day, 60 minutes time frame. So we're looking for the downside in the metal right now. As we can see here, we ended with X at 4.7 and now selling off or going down within the wave Y. Within the wave Y, we have an impulsive structure. At the end of this impulsive structure, which is a 5 waves, 1, 2, 3, 4, 5. At the end of the impulsive structure, that will be ending with A of Y. Remember, WXY is a double zigzag, right? So you have a zigzag structure like this, reaction higher, and another zigzag structure like this, right? So ABC as your first zigzag, that ABC ended W, right? And then you got a correction, which is your X, and you should be getting another ABC lower before it finishes the Y, right? But it is still considered to be corrective structure because it is a WXY basically, right? So in this case, typically Y is going to be equal to the W in terms of the relation, the Fibonacci relation, right? 100% to 161.8% of the W here. So we are now within this A here, A of Y, which is a 5 waves down here, right? And we're still calling for the downside, and the rally should fail for the downside. Now, of course, another possibility will be the A already ends over here. In case we starts to rally quite a lot like this, then we should be considering A already ends. Now if that's the case, then we can always adjust the count a little bit, right? We can call 3 ending here, we can move 1 here and here. You can always play around with the position a little bit, right? And to make it complete, for example, and then we can see a bigger rally in the B. But still, the idea here is as long as we stay below 4.7, the rally is expected to fail for the downside again. If I look at the daily time frame now first of all, let's talk about the overall trend. Now if you take a look at copper, right, the overall trend is bullish. Why? I'm zoom out all the way to all-time. Basically, this is all the data we got here. This is all-time high, guys, right? This is all-time high. So there's no question what the right side is. So if you only look at the 1 hour and nothing else, then I think it is wrong. A lot of people do that, but it is completely wrong. All right. The most important thing is not the 1 hour. The most important thing is the weekly, the monthly, and the quarterly is the most important time frame. It is very clear that this is bullish. It doesn't matter what the 1 hour chart shows. It doesn't matter, oh yeah, we can go down and so. It is bullish. That's it, period, right? Now, we make all-time high here. And you notice here that this rally was only 3 waves, guys. So you don't go to all-time high in a corrective structure, right? There is no way that you go to all-time high in a corrective structure. So that means it is bullish, and if there is any risk, to be honest, the risk is that the move down truncates because it is bullish. So the risk is always going to be that the move down truncates. So we are currently doing WXY, and this is the X over here at 4.7. That is your X here. So this is your W. So you are looking for WXY. If everything goes normal, then yeah, we can go to 100%. But again, because it is bullish, if you look at the daily, the risk is that we truncate without reaching the full 100%, and we rally higher before. That's always going to be in the risk because you are going against the trend. Now the other option here, in case the pullback actually starts to get really acceleration, like to the downside, and this is what I call the alternate, which I don't like, is doing an expanded flat from here, A, B, and this is 1, 2, and then you got 3, 4, 5. ABC expanded flat before higher, right? So I present you all the alternates doesn't mean that, oh yeah, I cover everything. Well, yes, in a way it covers every single scenario, but we still need to prioritize which one is more likely than the others. Now, expanded flat is definitely not my preferred count because it makes new high, so I don't have the reason to call it like an expanded flat, because again, when you make a new high, you want to be in that direction in the most aggressive way instead of calling a flat. So in that case, then yes, I would say that currently you got a lower low sequence, your WX lower low, and ideally it goes all the way down to 100%. That's the ideal scenario, but you have to understand the right side, the trend is clearly bullish here. So that means potentially it might truncate, and therefore should I sell it? I don't know, probably I would prefer to buy instead of selling if it reaches here, because I know it is bullish, right? But I understand that it does have a lower low, and therefore yeah, we're still calling it lower, and there's still possibility of extension lower as long as we don't break above 4.7, which is the X here, right? This is the X here. Now if we rally and even just simply break above this trend line like this, break and close above, and there's potential this is over without having to reach the full target level to the downside, right? If we continue to rally and break above this descending trend line here. So we don't necessarily need to break above the X to basically be cautious about the structure here, right? We just need to break and close above this descending trend line, basically to give us an alert that we might not extend lower anymore. Okay, but for now, as long as we stay below this trend line, we should be looking for the downside, and it has a scope to reach 3.79 if it can go to a full target level, but within a bullish trend. Again, preferably we continue to be on the long side in terms of the preferred trades, okay, preferred direction to trade. So that's the update here for copper today. As always, if you want to get more ideas, more updates, feel free to check our service. We have 14 days trial. The link is in the description of the video. See you all again next time, and have a nice day, everyone.